Welcome back to my channel, guys. So today we're going to review THORChain. So this is a top-down view of THORChain. You're not in early with social media. The token model is good. The team is anonymous, so that brings some uncertainty. And you can get a general feel for the evaluation looking at the color coding of the entire project from this top-down view. So what is THORChain? Is decentralized liquidity pools. You can send on one chain, receive on another, stake liquidity on pools to earn. So that means if I deposit Bitcoin, I will earn in Bitcoin some amount of yield depending on how popular the pool is. Maintain custody of assets. So this is a way to earn this crypto yield. It is a way to exchange as well as earn yield in a decentralized, trustless manner. So trustless asset exchange as well as trustless yield. It will bring interfaces into other chains. In the future, anonymous nodes currently rotate, which those anonymous nodes rotate every 3 days. All assets trade against RUNE. That is one of the reasons RUNE even has value. Does not need oracles to function via arbitrage opportunity. So in arbitrage, two assets are exchanged against each other, and they're held in some ratio, and it's controlled by the smart contract. So if someone wants to buy this asset, it'll push this price higher, and so there's just an established ratio between two assets, and so if they can pick up an asset cheaper in the RUNE ecosystem, people will buy it cheaper here and sell it somewhere else because of the discrepancy, and so that is why its assets will automatically keep the value that is the same as the rest of the market, and they don't need to feed in price feeds because it'll happen automatically using arbitrage. So that's why it doesn't need oracles to function, which it reduces the level of complexity, which is always a good thing. Pools earn fees and they pay out to the people who are liquidity providers. Liquidity providers stake RUNE is ratio, like the ratio is enforced through incentive ratios. THORChain's wallet connects to all other cryptos connected. THORChain wallet connects to all the other cryptos connected to the wallet. So when you establish your wallet here, you set up a seed phrase, which generates all your wallets. So your Bitcoin, your Ethereum, all the wallets that you would be using are generated from one seed phrase. And you deposit, and then you send you deposit to your account on THORChain. It sends it to the THORChain computer. Actually, here's a good example. Like, let's say you deposit ETH. You deposit into, let's say you want to do an exchange of ETH to DOT. So you buy ETH, you send it to your THORChain wallet, you send it into, you trigger the exchange, which sends your ETH to THORChain, which custodies the ETH. This custodies the ETH, and then it sends out DOT that exists in here. So all of these assets are deposited within THORChain, who custody is a decentralized custody of the assets. And so this is like a bucket of reserves. You send it out, your ETH, and it sends you back so its deposit of ETH goes up, and its deposit of DOT goes down. So, if you were to do that exchange. So it basically just custodies the assets inside of a decentralized environment. So this is a bunch of nodes, but you can view it as one computer in a sense, and that manages all of this. And that is managed by the nodes. So the RUNE token is an asset required for staking, pools of 1-to-1 ratios. So there's twice as many RUNE bonded as staked. So you need a ratio of 2-to-1 bond to stake. These are bonded to the pools, and the stake is 2-to-1, half that amount. So, and the pools to stake are 1-to-1. So that means that RUNE will have a 3x market cap as the assets locked. So whatever amount, if they have 1 billion locked, then they will have a $3 billion market cap minimum, and it'll be higher than that, etc. So currently, at the making of this video, they have 165 million locked, which means that according to that minimum value, they have a 500 million cap justified. and their current evaluation is 2 to 4 billion between there, which means they're about 8x overvalued over their assets. Now, obviously, in the future, the assets will go up and the value of THORChain will converge at that amount. So, if it's overvalued here, but then the assets go up here, then it'll converge right here at some point in the future and have the same value, like that 3x value in the future. But it will converge at the value that it should be at, or maybe not. Maybe it'll keep some premium. It'll keep some premium above, like what assets exist on the platform. But right now, it's 8x over that assets that are in there. And keep in mind that it's in beta. So, they're going to open up the amount, and so it will go up a lot, likely. And so it might keep that premium, and therefore you can expect the price to do well from that. All right, so let me actually just dig into this platform. So, future increase in demand for the token. I expect the token to go up, yes. Future market excitement from price momentum likely. I expect that to be the case. All right, social media, you're not in early. This is a project that is known by the wider crypto space, so it's something that you're not in early regarding that. This isn't one of those projects. Regarding the major upcoming events, they do have a big event coming up in Q1 of 2022, and I expect them to have price performance from that, which is they're going to open up that unlimited staking and mainnet launch in sometime early next year. And it is also to become community-run project in that period. It is expected to be a community-run project in that time. So not only is mainnet going to launch, and they're going to open up unlimited staking early next year, but also it'll become community-run. Okay, meaning whoever runs it now is not going to be the ones in charge of future. It'll be the token holders in charge. So money needed to move price up decreases. Expect that to be the case over time. Tokens on the sell side do decrease. I expect that to be the case. Low inflation rate. They do have a pretty good amount of tokens being released, but they have a 30% APY right now, but there's 16% inflation. But, that is going down. Here's the issuance, basically. This many tokens is released per year, which is 36 million tokens released per year. So the first year inflation is 16%, then it's 12, and it'll keep going down from there. So that's about the inflation right now. And you can expect when you deposit, you can expect about 30% APY, which is pretty good for, just depositing on the platform your RUNE. But half of that is subsidized through inflation. So the inflation's pretty high, 16%. But the thing is if you realize that inflation, it's not that bad. If you can participate in the release of the tokens, then it's not a negative inflation on you per se, because you can experience the inflation as it happens. So, it's neutral. Okay, and so now regarding token supply distribution, it's an irrelevant component, which is what we like to see, because it's structured like a company, like the token to do well as the assets deposited, come to exist. The dividend, it's reserve funded through on-chain activity, so they have a reserve, which is kind of like dividends or it's like income, right? Like a regular business income. And the nodes receive some of the income from on-chain activity. Liquidity providers receive it, and backstops to impermanent loss, similar to the Bancor backstop. And then they also can issue debt, etc. But, because the activity on chain goes to the token, is entitled to the token, it's like a dividend type structure, which means that it'll converge on time value of money, which means that, it is tied. The token is tied to the success of the platform, regardless of who owns what tokens. So that's not a factor. So regarding the supply, the ultimate conclusion is token supply is a great thing. Recent price action, it's not experiencing FOMO. It's 10x over the last 12 months compared to the average of 7.2, which is pretty good. So it's only slightly performed better than the average, but that's actually pretty good. That extra 3x is, good. But right now, like the price is not under any kind of FOMO, which is always what you want to see, like fear of missing out type thing. So it is not a low market cap. It is circulating 1.8 billion. So it's about that 50% mark for the tokens to be released. Fully diluted, it's a $3.5 billion market cap. So it's not a small market cap. Current niche it is serving a niche now, but it is limited on who it lets come in. It has a user, its Asgard desktop is its user experience, and they have some more things like that coming on. So app.thorswap.finance, but the network is under a halt right now, which is not good. But the DEX is semi-live. Some of the chains are live, some of them are not. And so they're just doing some upgrades. But the BEPSwap DEX on Binance, which is wrapped Binance token, so it has some DEX functionalities right now, but it is still in beta, and it is live for some functionalities. And total assets on April 21st was 9 million. As of June, it was 90 million. On September, it was 165 million. That is exponential growth. But then they experienced a major attack, which froze the amount of assets flowing in. And they also have caps on the amount of assets. So remember, this is early stage type project. And so, and it's also easy to have exponential growth if you're starting with such small numbers. You're starting with 9 million all the way to 165 million, but that's still small numbers. We're not in the big numbers, and we want to see how it grows when it has bigger numbers. But it is an exponential growth regarding that. So that's always a good sign as well. All right, so the token used for servers, let's just describe basically what the token does. It's proof of stake, but in reality, it's like proof of bond. It's the token is used for liquidity, governance, incentives, and amplifier. 67% are going to be bonded, 33% pulled. It is designed to have a 3x market cap, the total size of all assets pulled minimum. Pulls earn about 13%. Running a node earns 22%. Actually, it's 16% right now, but it'll probably be 13% soon. Bonded to nodes to secure the activity, 1 million RUNE per validator. So the nodes have to be quite a substantial investment to run a node, to run the architecture. Value of target. So that's like, this thing is very much structured like a traditional company because, these nodes, to run a node is like a shareholder, and you cannot run the system unless you're a shareholder. So it's like a company in that sense. So token distribution doesn't really matter. So value of target market is large. Decentralized liquidity pools, cross-chain. It is decentralized liquidity pools and cross-chain marketplace. It's an index. So it's kind of like an index of the tokens in the pools. So that's always good. So whatever projects, as long as people are using this, it'll capture that value existing in its pools, right? So this thing is tied to the value of what exists in its pools. So it'll always have a value so long as its pools are filled, which they will be. The size of the market of decentralized liquidity pools, to be honest, I think that the size of that could be, in the hundreds of billions, depending on how popular this is, between different projects. So that is, it could be a very high, like right now we're talking about this thing having a $4 billion market cap. And the value that will exist in decentralized pools that are accessed outside of chains could be anywhere from 100 billion to trillions. Okay, so depending on what the future of blockchain looks like. We are in uncertain times with blockchain because, this field is changing so fast. So we'll see how that goes. But of course, that I would imagine that would be a valuable market servicing pools that exist outside of blockchains, allowing for blockchains to communicate with each other. Okay, so let's go into other details. So major onboard, it was funded by Binance early on. So Binance is a fund of Binance seed. It's audited by Certic and Gauntlet. It's got the Cosmos software development kit, and it did have that major hack. So consider that even with these audits, it still had a major problem. But yeah, like now there's always the possibility that some rich guy comes in, buys up all the tokens, and like if they know that liquidity is going to come to this thing, that would be like a Solana type moment. And so that would be your big moment that could potentially happen. But, that's yet to be happen. But we could see as businesses come into the space, it's always possible that could happen. But right now, that's where things are right now. So Moat, how protected is our business model? It's got 100,000 lines of code. Forking is not very easy. It's got dozens of anonymous nodes, very complicated system. And its community, its connections. It would be very difficult to fork and just make a copy of. The thing like SushiSwap and Uniswap is those are just smart contracts, and so all they did was copy code. This one is a whole ecosystem. Up like jumping up nodes, etc., requires significant skill sets. So it's not going to be a simple copy and paste type launch of competition. So they do have somewhat of a moat. The flywheel effect, is basically a feedback loop. And I expect there to be a neutral flywheel on this. But there will be some network flywheel, but it's not the strongest of things. Best of the competition. I think projects like Solana, Dawn, Atom will do better. Why use it when they are, when they are fully running? So when these ecosystems are fully running and they connect with a bunch of other projects, they will offer the same service automatically as RUNE because they will have liquidity pools, but they will have other functionalities tied to those pools, and they'll also be in an inexpensive run environment. Also, this project experienced a hack on ETH router in July with 16 million stolen. The treasury paid for it. What they did is they tricked the receiver to believe it received something when it did not. The response to the hack was new procedures, new team members, and new security protocols. So they took actions. But that being said, regarding competition, they will have an immense amount of competition because every interoperable project is going to have the same functionalities as this project, such as being pools that can be accessed in an inexpensive trust environment. So they will have an immense amount of competition. Regarding the team is anonymous, semi-anonymous. People that I did identify was Chad Barrowford, THORChain technical lead, and that he's one of the people that I see talk about it. And he says it's a massive step in human rights to move assets on chain to chain. I agree. It is powerful that you do not need a centralized exchange anymore. You could use RUNE to swap Bitcoin, for example. One of the major drawbacks of Bitcoin up until now has been that you've needed a centralized exchange to swap Bitcoin for others, but now you will not need it because you can use this. Now, this project was established at a Binance hackathon in 2018. No formal titles amongst the team. And Eric Voorhees, the Shapeshift CEO, said when this project launched, he said it's the biggest event in crypto as of April. So that is quite a vouch for this project. So that's kind of like the team is somewhat vetted, and because Binance funded them and because Eric Voorhees likes it, etc. So evidence the team is trustworthy. They're delivering code. And we're seeing, it's community run, but for the most part, it has been delivering. And so you can assume that the hive that is behind this or the team that's currently behind it is trustworthy because they are delivering. However, I will put that there's risk with that because this team is semi-anonymous. There's no one to be held accountable, but there are things like that. And they do have extreme determination because they handled that hack and persisted. They survived the major attack. From the Telegram, which I disagree with these statements, but he says actions speak louder than words. On team inquiry, the team is semi-anonymous, but I don't care about actions. I want to know your history. That way I can know how skilled you are. And that's why I personally like choosing skilled people to invest in, because it just creates a higher probability that you will be successful at building things in the future if I know that you've been successful in the past. So the project will have a fluid team. Now, I do actually think this is risk in the future of apathy risk. You know, like if this thing has a high evaluation, like the valuation goes super high, then you'll have apathy risk because the people can cash out. And then why would they do the work of maintaining it? Now, I think they obviously will, because if I had a big investment in something and it made me wealthy, of course I would diversify out some, but I would maintain it, or I'd hire people to maintain it, etc. So, you know, this risk is not the highest, but there is some apathy risk that, you know, like it will not get the attention if it skyrockets in value, because a lot of people will make a lot of money from it. And also, I'm going to go into some of that explanation a little bit more in a minute. But here's an example. And this highlights what my thought process is exactly, that it actually happened. There was a breakdown of communication with Binance in March after Binance upgrade, where a node didn't communicate properly, and then there's a pile up and major problems from that. So I expect popular projects to maintain their relationship with this and to maintain their connections. But with each new project that connects to THORChain, there is another level of complexity in maintenance that needs to be there. And each one of these can upgrade, right? Each one of them can upgrade and sever the connection. So as we saw with Binance breakdown, that means the complexity and the needed work to maintain THORChain to many systems will go up as these chains change or upgrade, etc. So that is a risk that exists. So there's a risk that people will not put in a reward. But I do expect their governance to want to fund such things, because that's what keeps it valuable, and to maintain, etc. So there is a possibility that there's no issue here, but governance will have to make, like let's say the team gets rich from the project, they're going to have to fund development in the future to ensure that that this thing is maintained. So they'll have to set up bounties. They will have to set up bounties, etc. In the future. So those are all things to think about. And after this video, I'm going to go into DAOs, but that's a later topic. And I want to expand on it. This thing is run actually in governance right now. We'll talk about it. So the governance of the token chooses assets to list and upgrades, and it is a fluid team. It decides assets, the chains connected, the upgrades, and the node number. And in the future, it will be in control of the treasury. So it's just like a business. You are a shareholder by owning the token. And there's, so that is something to consider. And that's a good governance model. But, I'm going to have to do more studies on DAOs. I do think that they will work very well. But I have to actually look at, different things about them, because there's a lot of complexity there. It's been a while since I've looked at DAOs, and I'm just going to look into studies with them. Almost every project is moving to a DAO, and I expect DAOs to do well, because it's just a bunch of people working together, etc. But, once again, I'll dive into that. People will be in rotation, and eventually it'll be paid through decentralized funding. So in order for this project to be successful, I will say this. They need to understand what the problems are and what the maintenance needs are, and they will need to hire the appropriate people in the future to do that with the appropriate bounties and released at the appropriate times. So that is, what this thing will need in the future. And so the token holders if the token holders show apathy, if they don't stay involved, then this project could fall apart from that. It's similar to how America, when they said if the American public becomes ignorant and apathetic towards the democratic process, then the country falls apart. That's the way a DAO kind of works. As long as the token holders have the initiative to care about the project and to do the work of maintenance and hiring, etc., then it'll do well. But if they don't, if they ever establish apathy, and the apathy risk goes up as the price goes up. So, because, people cash out, etc. But then it's a rotation and someone new could come in and that new person could theoretically take up that work if they see a benefit for themselves. So, all these things should be considered. All right. Now, team has majority control through majority token control. So, yes, the token has control of the platform. So you need tokens to be a part of the ecosystem. Once again, it's like a dividend type model. So long-term vision and mission, it's got a simple one. It's just maintain those liquidity pools. It doesn't have it's a clear mission, which is purpose and function. It's just maintain those decentralized liquidity pools. Funding from governance will keep developers motivated. They have 140 million in treasury, but the funding from governance from on-chain activity will help develop, like I said, set up those bounties for maintenance and etc. And in future governance will gain control of the treasury. So high value upgrades, expect that to be the case. Value of services provided to increase, I expect that to be the case. This is irrelevant. Let's see here. So I got all this. Okay, so developer exposure, developer experience. It is part of the Tendermint software development kit, Cosmos ecosystem, so they'll have developers there, etc. User experience, easy to use, one seed phrase recovery, that is good. First mover, they don't have a first mover, but they do have some incentives because of the high APY, so that there's that. Now, one of the things I will say is why use this specifically when other layer ones are cheap to use. One of the reasons that this is becoming popular is because Ethereum is super expensive. But what happens when Ethereum becomes super cheap? And there's also other projects like Polkadot, Cosmos, AVAX, whatever. When they're cheap and inexpensive, they themselves become competitors because they will have liquidity within chain, etc. And so why would I go to another ecosystem if I can use those ecosystems, cheaply? And so I'll just do all my activity within whatever ecosystem I choose to stick in. So why would I leave my ecosystem to go to another one when my own ecosystem is inexpensive and has connection to all the liquidity, like all the different projects I care about? So, that's something to consider regarding the network effect. So tokens per person, I put it neutral. Okay, so it is high based on the market cap per account is kind of high, which is risky. It means there's more money per person in the project. And it also has monthly active users. There's only 1,000. There's only 250 basic users a day. But remember, it's in beta. And this is according to the THORChain Network Explorer. But remember, it's in beta. So take that with a grain of salt. But that's hardly anyone using it. And the network doesn't burn tokens. So I think I went over everything. So regarding the three major points, is it a low market cap with an accomplished CEO? No. Early on social media? No, but it does have a live niche, relatively speaking. So final flyover, the pros. It is index-like exposure, which reduces your risk of downside. Token value is tied to deposits and liquidity, so that's very good. You like these kind of projects. These are the type of the things you want in your portfolio because it's like an index and it's less determinant on a single blockchain and more determinant on just the success of crypto in general. So it'll likely keep performing at least as the average of crypto. It has a general moat around its added value. It cannot be forked easily. Community run, no point of attack. Now remember, regulation, like if governments attack, like America attacks crypto, this project might do well just because of that, because there's no one to attack. There's no single point of failure. So that is extremely well to have an anonymous team when governments are super oppressive. And it looks like America is oppressive right now. Hopefully it cools off with its garbage. But, this project could do well because there's no one to attack. There's no one for the government to go after. And that's always a good thing. And basically what it is it's simple. It is a pool, and its token is tied to the value of the pools. So as long as the pools maintain and grow, then the project should do well. And that's why it gets that index type exposure, because it's like matched to the assets on chain. The cons, anonymous team is also, there's pros and cons to have an anonymous team. The anonymous team is beneficial if there's high regulation, but it's also like the loss of attention is possible with anonymous team, and there's no one to take the fall. If now they take a fall in their portfolio value, but like if they up and leave, there's no one to blame, etc. And you also don't know their skill sets, like this thing that has been hacked several times. So there's all those kind of things with anonymous teams. So you can't look at their history and see how good they are, etc. Rise, as there's a rise, another risk. One of the downfalls is the rise of layer ones and zeros may make majority of market share. Those might take away its market share. When everyone is cheap and inexpensive, why would I use this? That's what I mentioned earlier. There's also complexity risk of staying up with many projects as they upgrade. So like looking at its design, as these projects upgrade, there is their gateways have to be maintained into the Thor system, and so like all of these have to be maintained. That's high maintenance costs. Okay, and all of these ecosystems can upgrade at any time, and that can create problems, as we've already seen happen with the breakdown in communication of Binance, which could lead to potential loss of funds, and which could be bad. Now, the final full-on assessment. So this is a time right here, this right here, which I think is about the next 15 years, which is a few expensive blockchains where we are now to many blockchain future. And you can see all these lines. This is kind of what I think with my mind simulation, if I run it forward, so right now, so the value of services provided, is the pink line, and it's the also the expense of layer ones. So the value of this project should go up as the layer ones become more expensive, like Ethereum. So the value of this project is tied to how expensive Ethereum is, or how expensive layer ones are, like how congested they are. But then after those are no longer expensive, the value proposition, the value of services provided may actually go down. But the pools will still exist there, And then if you look at the orange line, I said that's the complexity of maintaining the run architecture, and I expect that to just simply increase. We're not at all close to crypto stabilizing into a predictable framework. We are in a phase change in society, so the complexity in crypto is just going to keep going up until it collapses in some kind of stable, predictable framework. But right now we're far from that. So the complexity, the cost of maintaining this network is going to keep going up over time, because there's many different ecosystems that will rise and fall, and we don't know what the framework is going to look like. Like crypto is some kind of framework on which business will be built. It's like a framework on which businesses will be built, and this is still getting established, and it's changing rapidly. So the complexity is going to keep going up until we get some predictable model, and that includes the government relationship with crypto. It's too early to say that we're even close to not stabilizing. So the complexity, as far as I can see into the future, is just going to keep going up. So that means the cost of maintaining this network will keep going up, and the cost of developers' demand will be likewise. I expect more and more developers to come to crypto, so we're talking about rising costs of operations going through the roof as this future is built. Crypto is still being built, and we're far from it being established, being where it will be in the long run. And then the green line is price and highest incentive to cash out. So I expect this to actually have a high cash out point, which is, some point after its highest use case. But I could be wrong. I can't predict the future. No one can. But that's what I would expect in my mind simulation, is it would have some maximum value, in which case that value would decrease as the layer ones become inexpensive to use, and you could just use those ecosystems. So that is a risk as well. And then the red one is the incentive for doing work of maintaining the network is actually, like the red line, is going to be plummeting. At the same time, the value of services provided plummets because the price of the project will go up and you'll have the apathy risk to cash out, the desire to walk away risk, handoff leadership. So you have this skill set of people right here. So you have some skill set of people right here that build something, and then all of a sudden that thing gets valuable, right? And those skill set of people leave. So you need someone skilled to come in and take care of it when it's gonna become more complex, more costly to maintain. So that is a risk as well. But what they could do, like I would imagine that, hey, a lot of people who hold this and get wealthy from it, they're still going to create bounties and hire people and try to hire those people to maintain the network, etc. And so here's another way to visualize it. So this is where we are now, Atom, ETH, etc. There's a lot of money locked up in these systems. So most of the money here is expensive environments. So using RUNE right now makes sense right now because these projects that are highly popular are expensive and there's a lot of money locked in them. But over time, money will spread out into these ecosystems, the other ecosystems. Money will spread out. So what is the point of going here in the future when you could do the same functionalities in your chosen environment? So those are just the risks that I thought of. Now, that being said, this is a good project. I like it. And that is I try to be neutral in these evaluations. I try to go as in-depth as I can to get the most accurate assessment possible. If you like this kind of content, please like and subscribe. I will now go into my Patreon evaluation, which is my personal actions at this point. And and that is what it is. So once again, if you like this kind of content, please like and subscribe. I try to bring the highest quality content reviews that there are.